Welcome to Verde Capital Management's Fireside Chat. My name is Cindy Lundberg, and I'm one of 4 service advisors at Verde. I'll be moderating today's webinar. All of our participants are in listen-only mode. If you have not done so already, please find us on social media and click the follow button on Facebook, Instagram, and LinkedIn for some fun and informative content. During today's presentation, you'll hear about cryptocurrency from Eric Tomaszewski, investment advisor at Verde Capital Management. There will be a Q&A session at the end of the presentation, so please submit your questions by using the chat feature in this webinar or by responding to the invite email. Now, without further delay, I will turn it over to Eric.
Hey, Cindy, can you hear me okay?
Yes, I can.
Perfect. Let's dive in. As everyone already knows from some of the meetings that we've had, quite excited about this topic. And this has been something I think that's been on everyone's mind, so we're happy to dive in. With that said, let's dive into the presentation fully. So if you could hop over to the next, please. So for today, here's our agenda. 4 main topics being the rise of digitization, blockchain technology, Bitcoin through the years, and then also how Verde is investing in crypto and what's down the pipeline. So the rise of digitization. In the past, this deals with things that have already happened. So with digitization of the past, it's basically the process of taking analog information, such as documents, sounds, or photographs, and converting it into digital format that we can store and access on computers, mobile devices, and also other digital devices. Examples then that you may be familiar with could be turning music from a vinyl record into an MP3 player, or possibly capturing a video from VHS tape onto a DVD. The present, which is labeled as a digitalization, deals with everything that's occurring right now in our lives. So the present is represented by organizations of business activities around digital tech. In other words, these processes and interactions may not be fully digital, but simply rely more heavily on digital tools than they used to. This could be a shift from sending, let's say, physical letters using the postal service to using things like email with your Mac, or from having in-person meetings to using online video conference tools like we did through COVID, or shifting to the automation of manufacturing. The future deals with everything that is coming down the pipeline, everything that is into the distant future. This is dealing with digital tech advancing more rapidly than any other innovation in our history. This is being done by financial inclusion and enhanced connectivity, which is catapulting the world to a new layer of transformation. So now diving further, the rise of digitization and different markets, and here's some examples. So starting at the bottom left with retail, more people started online shopping due to the pandemic, while some even created their own stores through Etsy or Depop. Financial services, people started using online banking and paying digitally for convenience purposes. Today, decentralized finance, or DeFi for short, has become popular through the rise of Bitcoin, which has expanded the offerings beyond imagination. With healthcare, doctors' visits became virtual due to the pandemic, creating an increased desire for telemedicine as it was more convenient and obviously more efficient. And then lastly, a good example is transportation. As assisted driving has become more popular, digital enhancements such as self-parking and even self-driving features have become more popular. So before we dive into the history of digitization, I want to take a pause. In simplest terms, blockchain is a peer-to-peer digitized ledger. Think of it as a massive Excel spreadsheet that is secure and used to record transactions across a multitude of computers. The ledger's contents can only be updated by adding another block linked to the previous block, hence the word blockchain, connecting the blocks to the chain. It can also be envisioned as a peer-to-peer network running on top of the internet. And in layman terms, blockchain is a platform where people are allowed to carry out transactions of all sorts without the need for a central or trusted person, party, or even an arbitrator. So here, I want to talk about this history of digitization tied to this transformation we've seen over the years. So in the 1970s, we had the first personal computer created. Shifting further, we had in the 1980s, the first laptop being created. Next, in the 2000s, we had mobile devices becoming more popular. Next, we had in 2010s, Bitcoin becoming more popular. And then in the 2020s, blockchain being labeled as the next innovative technology breakthrough. So now that we dove a little further into what blockchain technology is, I want to talk more specifically about some of the features tied to it. So in this case, these are some of the biggest reasons for why this is such a big deal. If you look at immutability, it means data once stored cannot be modified or altered. Next, transparency. It offers transparency so that businesses can track every system detail. Next, with security, it utilizes high-level cryptography algorithms and methods. Next, with traceability, it offers all-time traceability that prevents fraudulent activities. And then last but not least, there's efficiencies, right? It enables businesses to carry out operations more efficiently and effectively. So as we dive further into blockchain, understanding that this is sort of at the core of this cryptocurrency world and also sort of underpinning things like Bitcoin and other tokens, it's important to understand the three areas where blockchain can be integrated. So as an example, we have enterprise digitization. Basically what this means is it's businesses in dealing with commerce. So a large majority of enterprises are realizing that blockchain is a critical priority to their organization and overall future. Examples being international transactions becoming more safe, increased efficiency in supply chain management, even digitizing time-consuming tasks. With Web 3.0, think of that as the next version of the web. Blockchain tech plays a vital role in this. With implementation, giving its ability to provide an elegant solution for the problems that arise from the flaws and limitations of today's highly centralized internet. Some of those features, those key features, are that it's open. It's built by an open community of developers and presented in full view of the world. In addition, it's permissionless, so anyone can participate. It's also trustless, so users can interact publicly or privately without a trusted third source or party. And then to dive into what I think is one of the core aspects of this, there's improvements to the legacy system. So it enables self-sovereign ownership of individual user data. It provides users the ability to grant and revoke access to their own data. Central servers no longer own and control the user data, but it's returned to the users themselves, to us. And sensitive user data becomes verifiable through privately generated passwords and storage. And last and definitely not least, tied to our world of finance, you have digital finance. So many central banks and governing authorities throughout the world are now contemplating issuing their own digital currencies as they have started to recognize the significant benefits, especially in meeting the need of an increasingly digital economy. If you look at infrastructure, it's allowing the facilitation of trading and transferring of digital assets and money. In addition, it's providing the automation and digitization of traditional assets and markets. And when it comes to benefits, the monetary transactions are able to occur faster and at lower costs than existing financial infrastructure allows. In addition, it can become programmable with enforceable rules via the blockchain network. So Bitcoin through the years, take a step back if you don't mind. So with Bitcoin technology, it has become one of the biggest innovations of the 21st century, given the ripple effect it is having on numerous sectors. Unknown to most is that the history of blockchain dates back to the early 1990s. However, it is in 2008 that blockchain history starts to gain that relevance, thanks to the work of an anonymous person or group by the name of Satoshi Nakamoto. Satoshi imagined a digital money that could circulate freely without the need for banks, governments, or any kind of central oversight. And in January 2009, Bitcoin was launched and the first Bitcoins were minted, or to look at another way, created. So now shifting to this graph. This is showing Bitcoin transactions through blockchain. Many people have asked, Eric, this seems like a complicated topic. Can you break it out into simplest terms? Well, I thought this visual is able to articulate that. So to see how Bitcoins can be transacted through the blockchain, let's take it step by step. So starting in the top left, you can see an individual requesting a Bitcoin transaction in front of their computer or their phone. From there, a block is created to hold that transaction. Then the block is sent to every node, another word for a participant in the network, so that they can validate that transaction. From there, proof of work is done, and then Bitcoin is available. The block is then added to the existing blocks, again, adding one block after the next within that chain, and then it's fulfilled. The transaction is complete and fully executed. So we've already addressed some of this, but taking you further from the beginning towards where we sort of are now, we talked briefly about Satoshi publishing his original plan for Bitcoin in 2008. What's unique about that time frame is this was right around the credit crisis, the abyss of what was impacting our world with our financial markets, greed, and disarray. And out of that unique time throughout all of our lives, something beautiful sort of came about, and it was this creation of blockchain tech, but also the inception of Bitcoin, partly looking at the system and saying, hey, we want to build a more efficient system for all. Next, in 2009, we have the first ever block being minted. In 2010, we had the first ever purchase made for Bitcoin to buy pizza for 10,000 BTC or Bitcoin. To put this into context, it was actually 2 pizzas that was purchased. And to truly fathom how massive 10,000 Bitcoins are today, at last check about an hour ago, we had Bitcoin in excess of $40,000 per token. To do the math for you, that is in excess of $470 million for these 2 pizzas, showing that it was very expensive for that cheese and pepperoni. With that said, shifting to 2013, Bitcoin's market cap reached $1 billion, signifying a very monumental moment that most assets in any world could not reach easily. To put that number also into context, if you look at the market cap as of today, Bitcoin is in excess of $900 billion. And at one point earlier this year was in excess of 1 trillion. And then in 2008, and that sort of segues into everything happening today, we've had upgrades that allow faster and more scalable crypto payment transactions. Diving in further to Bitcoin and crypto in, let's say, the 2020s, here are some of the bigger monumental moments that had happened more recently that partly were triggering events for us to want to dive further into Bitcoin, specifically for your portfolios and beyond. First one being Tesla using Bitcoin for treasury diversification and payments. This was around the first quarter of 2021, where Tesla bought approximately $1.5 billion worth of Bitcoin for their treasury operations. Why this is a big deal is it shows that Tesla and even others have looked at the currencies and dollars and euros within their treasury operations and blatantly have said by making this decision that they don't see as much of a benefit with how they're managing things currently, or the potential devaluation that you're seeing with currencies like the dollar, showing that there's a bigger value potential for Bitcoin than just purchasing things with it. Next, Venmo and PayPal integrating crypto. Another significant moment where most of us in some respects have or know someone in our family that has a Venmo or PayPal app, it's a big deal because this literally opens the door to cryptocurrency and uses of it for tens of millions of merchants and hundreds of millions of consumers around the world. And last and definitely not least, the institutional adoption of crypto. Coinbase is one of the most notable cryptocurrency exchanges in the world. And now with them becoming the first publicly traded cryptocurrency, it is now pushing the envelope on some of the biggest money in the world from institutions, hedge funds, and even advisors like us wanting to dip further in to this market and get exposure. So how is Verde investing in cryptocurrency? Our big objective as your advisor is to manage risk appropriately and make sure that everything can be diversified in a way that can smooth out your returns while also giving you additional alpha or outperformance. What's exciting about the cryptocurrency market is the level of innovation and the comparisons to the time frame of the internet being built. There was a great deal of opportunity if you found the appropriate tech companies to invest in at that time. Now with Bitcoin specifically, it allows us to get access to a high growth asset in some respects comparable to what we would expect from an individual tech or growth stock, with the added layer of beating to its own drum and in essence zigging when other investments zag. This ability to move differently than stocks and bonds is the ideal way to better diversify our portfolios for you. So with this graph now, this graph allows us to dive further into the comparison between Bitcoin relative to gold and a dollar. And as you can see, there are many characteristics of Bitcoin that make it more attractive from a store of value or digital gold perspective. In addition, the same can be said when you look at Bitcoin as a currency for buying or transacting. So as you can notice from the top going down, from an interchangeability and non-consumability standpoint, they're all fairly similar. And thank God we can't consume Bitcoin and eat away our supply, or other items for that matter. But as you start to dive further, you can see where this is quite unique. So if you look at overall portability, Bitcoin exists within a digital wallet, or as an example, on my computer or on my phone. I could have 1 million Bitcoin on my phone. It's not going to cost me anything from a weight standpoint or make me sweat. But if I had $1 million worth of gold, you can only imagine how difficult that would be to make that portable. If you look at durability, well, this is Bitcoin on the internet. So it's highly durable versus if you had the dollar in your pocket and it transitioned hands from you to a merchant and then other people around the state or the world, it could ruin that dollar over time. Taking a step further, go back, please. So with being highly divisible, Bitcoin has a high level of divisibility. To put this into context, 1 Bitcoin is divisible to 8 decimal places, meaning it's 100 millionths of 1 Bitcoin, compared to, let's say, if I had $1.51 going out to the hundredths place. In addition, if we look at it being secure, this is highly secure, partly because it's coded on the blockchain. It's hardwired into the blockchain to where it's clear as day what's happening with those transactions can't be changed. With other things, well, we've seen counterfeit markets within gold and the dollar over time. Bitcoin is easily transactable. It is also highly scarce. There is a definitive supply of 21 million Bitcoin that exist, and we know definitively what that will be. Whereas gold, we know it's limited, but we don't know the full extent of gold in existence. And with the dollar, as with other typical currencies, we've seen even through COVID and beyond the amount of money that can be supplied or injected to the tune of hundreds of billions and even trillions of dollars that could create a devaluation and impact that overall supply. Government issued is low. There's no government behind Bitcoin. It is also decentralized. This is a very important topic, so I want to address this. Decentralization is one of the most important benefits of using blockchain. So it's really important that everyone understands the advantages it brings to society. So in blockchain, decentralization refers to the transfer of control and decision-making from a centralized entity, think of that as an individual, an organization, or a group of people, to a distributed network. And decentralized networks strive to reduce the level of trust that participants must place in one another and deter their ability to exert authority or control over one another in ways that degrade the functionality of the network. Basically, this is all very much about freedom and control being in the hands of you versus others. And then last but not least, programmability. It's programmed into the blockchain. Okay, here, just want to take a pause. As it says from the title, a small Bitcoin allocation can improve portfolios. The intent of this graph was to show the impact that a little bit of Bitcoin can have on a traditional 60-40 portfolio. So as it says to the far right, a small allocation of Bitcoin significantly enhances a 60-40 allocation mix while only minimally impacting its volatility. And taking it a step further, what's really important is Bitcoin has never experienced a multi-year bear market like many other assets around the world have. If you dive into this graph, again, there's a lot going on, so I'm going to just touch upon a couple of brief points. You could see in more of that copper color, we have a traditional portfolio from basically January 1st of 2014 to March 31st, 2020, to show a long enough time frame. And it shows that over that time frame, cumulative returns of that 60-40 split between stocks and bonds was up about 26%. And then as you can see in the progression north, you can see in 1% allocation of Bitcoin to a portfolio, enhanced in green, a portfolio from 26% to 34%, a 2.5% allocation enhanced it to 45% over that time frame, and then with a 5% allocation, more than doubling the overall portfolio return. This is where a little bit can go a long way, which is partly why, as you've already started to see within your portfolios, we look to get Bitcoin exposure to the tune of anywhere between 1% to 5%. Next. Here, so this talks about historical outperformance relative to traditional asset classes. And part of this is, again, a lot of numbers here, but what I wanted to really make as an inference is the difference comparatively. So this is looking at January 2012 through December of 2020. And as you can see at the very beginning to the far left, it's showing Bitcoin relative to the S&P 500 largest companies in the US, relative to bonds, right, the defensive part of our market, and then also gold, the commodity. And as you skew your eyes to the far right over a 5-year time frame, it truly shows the magnitude. These are annualized numbers to show that even though the stock market can do quite well, and so could bonds and gold, to the tune of double or even single digits in some respects, Bitcoin has been able to consistently do annualized numbers in excess of 100%. Again, where a little bit can go a long way with attribution across your assets. Taking it a step further and really diving into the diversification benefits, with this graph, diversification is important in investing, partly because markets can get volatile and unpredictable. And by diversifying your portfolio, you can reduce the consequence of a wrong forecast. This chart shows low correlation of Bitcoin with traditional asset classes, showing how Bitcoin creates diversification in these portfolios. Now, what does all that mean? Here's how to look at this graph. So if you look at the S&P 500 relative to, let's say, bonds, where it says negative 0.03, or Bitcoin with 0.15, and even gold with 0.04. What this is showing us is that if you have something that's 1 for 1 and moving in the same direction as the S&P 500, that would have a numerical value of 1. Meaning if S&P 500 is up 5%, a stock would be up maybe 5%, moving in the same direction, up and down. With bonds, this is why we like bonds within portfolios from a diversification mechanism, because they are inversely correlated and they move in a different direction. So the way to know that is because it's negative. So the further you go closer to zero and the more negative you go, shows that it moves in different directions to a bigger magnitude. Again, trying to show the point that bonds are great for a portfolio, but also with Bitcoin moving to the beat of its own drum, cryptocurrency literally being, having catalysts that are different from the traditional stock or bond, could do wonders for a portfolio to allow us to smooth out returns, but also give you that alpha, which is what we're designing within these portfolios long term. As it says, crypto is not going anywhere. And here's some examples of what's happening as we speak that are quite exciting. So the US Federal Reserve is working with one of the most astute universities in the country, MIT, to create the digital dollar. There's an actual project that exists to work on a digital format for our own US dollar. PayPal is allowing crypto investments and payments through their services, some of what I mentioned earlier. Visa, you can also bucket in MasterCard and other card providers, but specifically with Visa, Visa has a crypto-linked card reaching $1 billion in transactions in the first half of 2021. BlackRock is putting Bitcoin futures in their hands. This is quite significant. BlackRock, a firm that we actually invest in for many of our client portfolios through some of their ETF alternatives. Bitcoin is one of the biggest household names within our traditional finance world. They are putting Bitcoin futures or getting access to Bitcoin through a derivative contract, a different form, but still Bitcoin nonetheless, within funds as we speak. And then lastly, decentralized exchanges are handling a record $73 billion in overall trading volume in February, up nearly 50 times from a year ago level. Quite significant in a short amount of time. So last and definitely not least, where are we at with our innovation currently, but also within the pipeline? Here's where I want to address some of that. So for our current strategy, we're investing in Bitcoin in clients' portfolios through GBTC, which is the, look at it as a regulated, trust-oriented structure that allows us to get access to Bitcoin for portfolios in a way that is controlled, but also a way that is safe, with one of the biggest names in the country within this space managing billions of dollars. And what we've been doing underneath the hood has been countless research on new cryptocurrency holdings and things of the future that we want to get you access to. And what we're working on internally with attorneys and CPAs and with our compliance department is making sure that the strategy is compliance approved, but also safe for you to get access to this unique, nuanced world. And then diving further, get access to new crypto investment opportunities to where, as of today, excitingly, there are fintech firms that are literally working as we speak countless hours to bridge the gap to allow advisors like us and clients like you to get access more directly to different forms of cryptocurrency tokens and to eventually get something like Bitcoin or potentially others directly within an IRA or within a taxable account or trust, which is exciting. And we hope to bring more to you on that front in the near future. Thank you for your time, everybody. And now for the next, we have a half hour earmarked, but we'll take out as much time as necessary. We're going to dive into Q&A.
Yep, so now we'll start the Q&A session. As a reminder, you can submit your questions using the chat feature or responding to the email invitation. I will send a message to the chat so everyone can see the communication bubble on the bottom left of your screen. We do have questions that came in ahead of time from a couple clients. The first being, what are your thoughts on Ethereum?
Gotcha. Okay, awesome. This one is exciting, and here's why. This is the Bitcoin gets all the excitement because they are the biggest cryptocurrency in the world, and they were the first. And they deserve some of that attention. But number two, a close number two, to the tune of 400 plus billion in market cap or size, is Ethereum. So as of right now, Bitcoin doesn't allow users to do more than basically buy, sell, or hold it. Great, but to some extent limited, right? With Ethereum, it's an open source platform that runs applications that allows for far more complex transactions, much more than is capable on Bitcoin. In addition, these applications, which are called, they're called smart contracts, some crypto verbiage for you. It makes it possible to get a loan or maybe lend money, or another example could be to accrue interest and even exchange one cryptocurrency for another, to where in essence, these unique applications, anything that a developer can think of, it could become fathomable if it could be written into code. That's the exciting part of that. And what's even more exciting, because this is quite timely, is there's a reason why you've seen Bitcoin go up more recently. And part of the reason that's happened, especially through most of August, if you look at any graph, has been because of the excitement tied to Ethereum and sort of that lifting all boats. So not to dive too far into the weeds, but it's an important educational source. There was a recent upgrade at the early part of August called EIP 1559. Just know that it was a big event within Ethereum to make it more efficient. The problem up to this point has been Ethereum has been used by so many people and applications to where it's costly for transactions and it takes time for transactions to go through, which is a limitation. So one of the biggest things that happened several weeks ago was they made it more fathomable for there to be more efficiencies with transactions, which allowed the market to get behind it. Not only lifting that, but also Bitcoin and other tokens. And some of this is a bigger topic tying into Ethereum 2.0, which is a big news leading into next year with a to be determined date where more enhancements and efficiencies with the applications and how the blockchain is structured will be put into effect to make sure that this is more capable and cost effective for the average people, to the tune of billions of people around the country, to use Ethereum underneath the hood of future use cases. Great question.
Thank you, Eric. We got a question about the cons of cryptocurrency. So cryptocurrency sounds great, especially Bitcoin, but what are some of the cons into incorporating this into a portfolio?
I thought this was going to be an exciting conversation about cryptocurrency. No, all kidding aside, there are definitely cons, right? So good question here as well. There are plenty of risks because remember, if you look at the inception of this in 2008, 2009 timeframe, it's only been just north of a decade. That might seem like a long time, but that's really short. If you think of asset classes and investments, it's like a little infancy. It's at its infancy at this point. It is literally an infant to where it's going through its growing pains. And with anything that has growing pains, you're going to have the baby crying at times or having to learn as it goes. So there are aspects of this that are risky, which is why you see incredible volatility and big swings that at times happen overnight, where literally, as people will say, a decade happens in a day. But we believe that as this market continues to flourish and there's more adoption from larger money and bigger institutions and more education around this topic, which is literally at the core of why we're doing this, it'll lead to a market that is overall more predictable and safer, but also easier for people to get access to, where, let's say, things like their private keys, which tied to, let's say, something like a digital wallet, are not susceptible. But remember, this is still something that has to grow over time, which is why we're taking our time and having conversations with compliance before future steps, and why even with the way that we're getting access to Bitcoin currently is through a trust wrapper where we don't have to be at the mercy of holding on to your digital wallet keys, which is a massive risk for us and you combined.
Great, thanks, Eric.
Cindy, I was hoping I could add a little bit to that. Just the specific downsides, I guess, to cryptocurrencies right now that we see here also are that there's quite a few gamblers in this market. And it's just when you're dealing with a shareholder base that is, where some people are looking to get in and get out very quickly, there's a lot of excitement around this. And people do buy and sell cryptocurrencies very, very quickly sometimes. It can create extremely high volatility. And I think Eric had mentioned that there's volatility in these asset classes, but we're doing everything that we can to protect ourselves in this case by using our rebalancing tools, so that when a cryptocurrency like Bitcoin does go up a lot, that we take profits for you along the way. And when it goes down, that we're buying in at those dips, right? It can actually help us enhance the returns and also smoothen out the ride for you. But one of the big downsides and why we encourage clients to be very careful if they're going to invest in cryptocurrencies on their own is that right now it's kind of a little bit of the wild, wild west. There's a lot of gambling that happens in this space, and it's just very difficult sometimes when you're dealing with an asset class that can literally move 10 to 15% in a couple of minutes, you know.
Thank you, Carl. We do have another question. Are you looking solely at Bitcoin as an investment vehicle at this time, or looking more broadly at companies utilizing blockchain and crypto token tech to facilitate business in other domains?
Yeah, and Carl, at any point, feel free to jump in on some of these as well. The short of it is, we like Bitcoin, and for obvious reasons, we started there. We are looking at additional opportunities, and we have looked at some companies that are tied to this market, specifically that are utilizing blockchain. Think of examples like Microsoft, or if you need certain type of tech hardware for your computers, we're looking at it from that avenue. We've also looked at companies that are publicly traded that deal with mining operations, and we also have started to look at the likes of Coinbase, which is a publicly traded cryptocurrency exchange, another way to sort of get indirect exposure. Where I'm trying to focus my energy, even though these things are interesting, and we're bringing up these research topics every quarter to assess if we want to get involved with one of these publicly traded companies, my preference for getting access to crypto is not the indirect route. I would prefer to have the tokens directly because I want to get sole access to that versus doing it through a conduit structure. But to your point, we are definitely looking at that. In addition, this sort of segues into the other question I see in the chat. Is Verde currently doing any other exposures other than GBTC? The answer is no. Will there eventually be getting exposure to something like ETHE, which I believe it's referencing another option through the same provider, a Grayscale Ethereum trust. We have talked about that. There are still ongoing conversations to see if we want to approach it that way. To the same point, I would prefer to get access to Ethereum or the Ether token more directly instead of through a conduit structure. We have also talked about looking at getting more exposure to things like Ether through, think of what's being done through the Chicago option exchanges and futures exchanges, where we can actually get derivatives of this through, let's say, buying futures contracts. So we are exploring all options, but nothing that is formal and delivered to clients yet.
Great, thank you for addressing those. Carl, did you have anything to add on that one?
Nope, nothing to add.
Okay. We have another question. What is your opinion of the Gemini exchange?
Yeah, a great question. So remember, there are risks. Let me preface all of this by saying there are obvious risks with attempting to do this on your own, and we want to be there to support you, knowing that some aspects of this are the wild, wild west and is a whole different learning curve. But with that said, to answer it directly, the Gemini is one of the largest cryptocurrency exchanges in the world, to where if you are looking to get access, the ones that we feel the most comfortable with would be a Gemini and a Coinbase, just because of their obvious size and their magnitude within this world compared to other exchanges. But again, there are risks to attempting to do this on your own, so be mindful of that. And if you have questions, that's what we're here for.
I did want to add, when it comes to these exchanges, and this is the part that if you really study the history of Bitcoin and the way that people have invested in it in the past, it's littered with stories of exchanges going under, Bitcoin being lost, people not having, secure storage of their keys, and essentially their Bitcoin getting stolen. So this part that is really complicated. It can literally make the difference between whether your Bitcoin ends up being yours or not if you choose the wrong exchange. So this is one of the reasons why we decided to get Bitcoin through Grayscale Bitcoin Trust. It's an indirect way of getting access to it, but one where we feel very confident that Bitcoin isn't just going to poof and leave our portfolios anytime soon, right? So Gemini and Coinbase, like Eric said, are two of the most reputable, but we don't currently invest in either Gemini or Coinbase for clients.
Thank you. We have another question that came in. Have you started purchasing Bitcoin for our portfolios? And if so, how and where would we see this on our dashboard?
Carl, you want to dive into that one, please?
Yeah, so all of our clients that here at Verde do own some Bitcoin unless they've expressly told us that they don't want it in their portfolios. Bitcoin is part of the alternative sleeve of our portfolio. So as you can imagine, we can invest in a variety of different asset classes, stocks being the most common that we invest in, bonds being second. And then we have alternatives, which include things like real estate, commodities like gold, and then also cryptocurrencies like Bitcoin. When it comes to investing in things that are alternatives, we typically prefer a trust structure. For obvious reasons, trusts have been used for years, but let's talk about gold for a second before we go through Bitcoin. When we were investing in gold during the financial crisis, and then most recently during the COVID-19 recession, gold has a very specific problem, which is that if we were to hold it for you, where would we store it? Most of you have come to our office here. You notice that everything's glass and we don't have a vault somewhere. So so when we buy gold for you and we buy that commodity, we actually buy the precious metal itself. That precious metal is stored in vaults in our case in New York and in London, and that vault is the way that we get exposure to the price of gold is every time we buy a share of one of these trusts, they go out and purchase a certain amount of gold that backs that that share in that trust. So the way we get exposure to Bitcoin currently is we buy a Bitcoin trust, one done by a company called Grayscale. And the Grayscale Bitcoin Trust is the one that Eric referenced, which was the ticker symbol GBTC. So every time we buy a share of the Grayscale Bitcoin Trust, that is backed by an equal amount of Bitcoin that Grayscale holds for us. And every time we sell, then we get dollars, and Grayscale goes and disposes of some of the Bitcoin that they're holding in reserves. So that's how we do it in the portfolios. You could see it on your dashboard by logging into your Verde client portal and looking specifically for the Grayscale Bitcoin Trust, the name, and it would be under the investments section. So if you go to your Verde client portal, click on investments, every one of your portfolios should have it in there.
Thank you, Carl. That kind of leads into another question we have. It says you compare Bitcoin to gold. With gold, we use it in electronics, jewelry, teeth, among other things. So I understand the scarcity and value because you can actually do something with gold. What can you do with Bitcoin? How does it create value?
I could take this one. So if you think about Bitcoin, it has some of the same principles as gold. Let's talk about why gold became, the de facto world currency even before the dollar was around, right? It didn't rely on any central governing authority to claim that it had value. People just found it to be precious, right? So maybe it was because it was shiny or because they liked it, but essentially imagine if every time you had a king or a queen be deposed in history, the currency would all of a sudden evaporate. Well, that wasn't a good thing. So people used gold because it was commonly accepted that gold was valuable. So even if the king was deposed by his son, it was no longer King Henry, it was King Edward now, right? Well, gold was still there, and you could do commerce and you could exchange and do things like that. So just like gold, Bitcoin has those nice principles that make it scarce, right? Gold, there's only so much gold in the ground, right? And you can't get any more of it unless you dig increasingly deep into the ground at extreme cost. Bitcoin, there's only 21 million Bitcoin that'll ever be out there. There's about 18 million out today, and the way to get more is you have to mine it using very expensive computers and a lot of electricity, right? Today, the Bitcoin blockchain uses up more electricity than the country of Greece, just to give you an example. So Bitcoin is scarce, It has a low inflation rate, just like gold. And for some reason, and again, nobody really understands how these things happen, but somehow we've all agreed that it's valuable. And today, one Bitcoin is tens of thousands of US dollars. And that's real, right? So just like we do with gold, where we have that scarcity, that low inflation, gold became a good store of value. Today, most of us don't use gold to go to the store and buy our coffee with it. I suppose you could, but it'd be very odd. Just like you don't go to the store and buy your coffee with Bitcoin typically, right? But you will use gold in a safe to protect yourself against inflation, against the printing of money, and to keep up with purchasing power. Bitcoin has some of the same principles, but like Eric showed in his slide, there's additional benefits to Bitcoin that don't exist with gold, which is easily transferable, easily movable, divisible, right? Decentralized, right? So gold, you can't easily send it across borders. You have to send it by courier, right? It can be counterfeited, right? So Bitcoin, very difficult to do some of those things. Hard to counterfeit, almost impossible to shut down from a government standpoint, and very easily transmittable. So
let me jump on this one. I agree with everything that Carl's saying, but there's a deeper conversation that needs to be had here. For the most part, everyone on this call is based in the US, right? And we don't look at ourselves as rich, but we're all rich. The Westernized society is rich compared to the rest of the world. And what's unique about something like Bitcoin and where it gets value is not only the perception that people give to it, but you have to understand the reasons for why. If you look overseas in many areas of lesser developed Europe, Africa, China, India, South America, to the tune of billions of people, they either don't have traditional bank accounts or in some respects aren't even fully tied to society in its traditional sense. But with all that said, even if you're living in some of the worst situations in your country, you still have access to a phone because phones have become cheap. They've become accessible. And for the first time in history, now you're getting to the core of why I'm so fascinated by this. For the first time in history, we now have people who can be a part of society that never were in the past. And they could be banked by having a phone and having a digital wallet and having Bitcoin there, and then being able to make something in a remote place of, let's say, Africa, and be able to actually get compensated in some way and be able to transact that. That's the bigger topic. In addition, again, where I think within our Westernized society, we're a little skewed, we have stability with our government, right? For the most part, right? That I guess we could debate on the next Fireside chat, but for the most part, we have stability in the US. Other countries do not. They have oligarchs, they have tyrants, they have situations where generationally, from grandparent to parent to child to grandchild, each generation has seen different forms of currencies. This has happened in areas of South America, to where this is the first thing that allows them to feel some form of stability.
Thank you for that. We have another question. There have been a few that have come in. Can you explain the Bitcoin ATMs and what's the growth rate for these ATMs as it ties to Bitcoin popularity?
I can't speak to that one. Maybe Carl can.
I can't either. I have not heard of those yet. But we will research that and get back to you with an answer on that. But I don't know off the top of my head.
Yeah, so a little bit more specifically, we can get back to you separately, but with Bitcoin ATMs, they do exist. They're in different areas around the country right now, and that market is growing to where you can go to a Bitcoin ATM like you would any typical ATM and be able to then have access and to do things with, let's say, a Bitcoin through a form of digital a wallet. But when it comes to the growth rate of that, That is not something that's on our radar. We're not looking at it as an investment opportunity. Again, for us, we want to get pure access to the tokens through the trust format or the tokens directly through a cryptocurrency exchange. I'm also seeing another question that ties into the timeline to get to that 21 million coins. There was one individual who actually got it right. It is about, from the research that we've seen, it's well in excess of 100+ years. So fortunately, this is not going to be dwindling during our lifetimes, but the expectation is that it will dwindle over time with the amount of Bitcoins that are out there within circulation. And the year that has been mentioned has been around 140 is roughly the time frame. And the odds are at that time frame, well after all of us have passed this earth, there could potentially be changes or updates leading through that time frame.
Great, thank you. We have a question that came through via email, not Bitcoin related, but what exactly are NFTs?
Yeah, now we're getting to the fun part. So when it comes to NFTs, this is something that maybe some of you have heard. If you haven't, get ready to be mind blown. So NFTs stand for non-fungible tokens. So let's break that down because that sounds weird, right? If something is fungible, that means it could be exchanged or replaced with something that's identical, an identical item for no loss of value. For example, that could be, let's see, like a dollar bill or pork bellies or even Bitcoins, right? They're all fungible. Change them for an identical item, no loss of value. Each is worth the same as, let's say, another. Now, if something is non-fungible, however, it's unique like a work of art or an autographed baseball. The word token, in crypto verbiage at least, means something that is unaltered. It's an unaltered unit of data that exists on the blockchain. So this basically means that a non-fungible token is a crypto-related asset that can't be replicated. That's really at the heart of why this market that you're hearing about or you will hear about is taking off and has a lot of interest. In addition, here's a better way to look at this. So think of it like a game-worn jersey. Anyone can go to, let's say, Champs or Dick's Sporting Good and buy an NBA star's jersey. But only one person can own, let's say, that one worn jersey by LeBron James in his first championship win. They might look the same, right? But they are definitely not the same. NFTs are the digital version of that. Even more, here's why you should care, because it sounds weird, because in some respects, NFTs can be just a JPEG, right? Something that it looks as though it could be replicated. So what's really at the core of this is that you should care because artists care. Artists in the sense of drawing a piece of art to artists who deal with music and everything in between. This type of technology allows artists to retain investment in their work even after it's been sold, because it puts that digital ownership right back in the hands of the creator. And to think of even musicians have been screwed over the years with how they are compensated on their music. For the first time ever, you can hard code into the blockchain that work of art that Carl's going to buy of Taylor Swift because he's a huge fan of her work. And then Taylor Swift can then be compensated appropriately for how often that is downloaded by, let's say, Carl, and then how often he's going to then download that to his other devices, from an iPad to other devices that maybe his family would use, to where it's a more direct way to compensate the people who have done something beautiful. There was no way to ever compensate these people fairly until blockchain technology existed. And now that you have gone down this rabbit hole with me, you can see how that just scratches the surface and how that could relate to many other industries. That's why it's a big deal. Awesome question.
Great, thank you. So we have a comment some about energy consumption concerns, but also, Eric, it seems like you have looked into EPI 1559 or ETH upgrade. How do you feel the EIP 1559 upgrade long-term will play out, and since it's addressing both energy consumption, but also scarcity?
I think I know what's being referenced in that question. Let me try to address it. So yeah, that EIP 1559 is that upgrade, and we are looking at the longer term play. But I'm looking at this being a way to arguably invest in HTML if there was a way to invest in that at the inception of the internet. And if you think of that, that should be the mind-blowing opportunity, right? To where this is still early innings. Even though you hear about cryptocurrency and Bitcoin, or in this case, Ethereum, it's like being at a baseball game, and I would argue you just sat down for the hot dog, you took your first bite, and maybe you picked up your beer and took a couple sips. But the game's just getting going. There's still not massive adoption. And as you can see, the reason that these upgrades are being put into place is that they have to make it more attractive and feasible for there to be massive levels of transactions every second. Just like you would on, let's say, a Visa or MasterCard across the world. And that creates more mass adoption. So how I think it plays out is there's still going to be overall volatility in these types of markets, again, because it's still infancy. And look they're still trying to build it out. It's like the kid trying to learn the ropes before they can actually walk and then run their marathon, if you think of it from that analogy perspective. So we think that volatility will continue. But with Bitcoin, we think in broader terms, there's much more left in the tank. And specifically with Ethereum, we believe that as of right now, I believe Ethereum's trading right around, let's call it 1,300, 1,400 per token. It's not unfathomable to see that go to 5,000 or even 10,000 over time. Sounds crazy, but that shows how early it is. And that's why the next several years, next decade, are going to be quite exciting.
Awesome. Thank you so much, Eric and Carl, for jumping in on the Q&A. That seems to be all the time we have for today. Great questions. This will conclude our fireside chat, so thank you for joining. If you'd like to share this, it will be available on our blog soon, which you can find at verdecm.com, our website, and clicking on blog. We'll send out an email with a link to that as well. And if you have further questions about this topic or anything else, feel free to reach out to us. We are always here for you as a resource. And everyone have a great day.
Thank you, everybody. Thank you, Cindy.
Mm-hmm.